Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Scarlet Fu. We're counting you down to the closing bell. Here to help take us beyond the bell. It's a global simulcast, joined right now by Carol Massar and Madison Mills. Welcome to our audiences across all of our Bloomberg platforms, television, radio, originals, and those folks streaming on YouTube. Down about 0.7% on the S&P 500, about 1% here on the NASDAQ composite. Carol Massar, interesting price action today, despite some earnings that actually weren't all that bad.
Yeah, it is interesting. It does feel like there's some malaise in the market environment, certainly on the equity side of things. A bit of a lull here. Having said that, those home builders really some outperformers, right? Up about 2.3% here, up more than 4% at their highs. What?
Yeah, this is like one of those industries where I've been waiting for the collapse. And I just think just completely defies it.
I can never make sense of. We have too many homes. We don't have enough homes. D.R. Horton, though, is really a big reason for the catalyst in the home builders today because their second quarter results topped expectations and their orders numbers really was outstanding here.
Yeah. Well, what's so interesting about D.R. Horton, I know you're going to talk about this a little bit more, Carol, but they showed that new home sales were a little bit light, but showing still a resilient market, right? So this is just another big question that I have is what are we seeing on the housing market here, Scar?
Yeah, but there's a lot of idiosyncrasies with the housing market in that supply is limited and people are holding onto their homes or they can't get the mortgage rate that they want to get with rates climbing. Right. The bigger picture that the economic data paint today is really one that shows the economy is slowing down, right? Jobless claims rising to the highest since November 2021, so the labor market is losing momentum.
Yeah, I mean, a lot of people are making bets here, and we talk about what we saw a little bit earlier in the commodity space with another dip down here in WTI crude. We should point out WTI crude has now actually erased all of those gains that it had coming off of that OPEC plus surprise production cut announcement. Meanwhile, back to the equity markets here, the Dow Jones Industrial Average lower by more than 100 points, or about 0.3%. The NASDAQ Composite down about 100 points, or 0.8%. The S&P 500 lower by about 25 points, or about 0.6%. Meanwhile, the Russell 2000 down by about 10 points, or about 0.5%.
All right. Despite markets finishing off their lows of the session, but as Romaine mentioned, down across the board, those major equity averages, most names in the S&P 500 lower today. Scarlet down 327 names in total, 172 showing some gains, 4 unchanged.
And the declines, if you look at the sector performances, really are concentrated among those that are leading to the downside. Autos and components are the big losers of the day, off by 8%. That is really dragged down by Tesla. You've got telecom companies, AT&T, for instance, getting a disappointing reception to its latest results on free cash flow. And banks also lower by 1.2%. Your best performers, some defensives, right? Food and staples up by 0.8%. Consumer durable and apparel also higher modestly by 0.2%.
All right, folks, let's get to some of the individual gainers, if we may. Top in the S&P 500, number 3 gainer in the S&P 500 is D.R. Horton, climbing to its highest since December of 2021, as we just mentioned. Second quarter results topping expectations, and we also just saw really some outperformance when it comes to orders. Orders were up 73% from the previous quarter. Talk about outperformance. It really raised the overall group, including Lennar, KB Home, pick your name. Lam Research, number 1 in the NASDAQ 100, number 2 gainer in the S&P 500. Semi-capital equipment company. Analysts are pretty positive after it reported third quarter results that beat expectations. We got that after the close yesterday. Did give an outlook that was weaker than expected, but Wall Street firms writing that the reports point to a bottom ahead, so we could see some bottoming. So you had KLA Tencor, Applied Materials also rallying in top of the NASDAQ 100. One more, Costco. It was up about 2% in today's session, top of the NASDAQ 100. Remember, after the close yesterday, raising its quarterly dividend to $1.02 from 90 cents a share. So that's more than a 13% hike. Company reporting in about a month. So just want to mention D.R. Horton for the radio guys, up 5.6%. Lam Research up more than 7%.
And I just want to add another one to the day. And we don't talk about it. Snap-on, of course, a big tool maker. They make a lot of diagnostics equipment for mechanics and things like that. Shares were up 8% here on the day. That was one of the bigger movers in the S&P as well. And maybe that's a sign that not all is wrong with the economy right now.
Yeah, well, I'm going to bring it back down for us, Romaine, because today was the big regional banks day. I'm going to focus on those for our decliners. The S&P 500 regional banks group down by about 3% on the day, starting with Key Corp, starting with American Express, rather, actually. They are down by 1% at the close. I feel like they're so interesting to look at because they do have that wealthier clientele. They were one of the worst performers in the Dow Jones on the day. Earlier today, provisions for loan losses at Amex topped $1.1 billion. That was well over what analysts were expecting. And shares were up 11% through yesterday. So this is the market maybe punishing them a little bit, coming down from those rosier expectations that we had yesterday. Then going back into Key Corp, down by 2.75% on the close. Net interest income was below expectations. They expected an increase this year, and now they are saying they're expecting a decline. And then I want to look ahead to First Republic. We're getting those earnings on Monday, but down 1.7% on the close on all of the news that we're getting in about those regional bank earnings. So the big picture here, does this performance represent a slow bleed for any type of credit lending that we're seeing for American consumers?
Yeah, and just another one to add to AT&T shares are down about 10% on the day. Biggest drop that we've seen going back to the year 2000, to be specific here. And we were talking about this a little bit earlier here, just the idea that when we talk about the moderation in that wireless segment and what we're going to hear out of some of those other companies as well. Let's turn to the yield space real quick here, because we did see a lot of buying in the bond space today, particularly when it came to treasuries. That actually pushed yields down by about 9 basis points on the 2-year yield, still camped out above 4%. On the longer end of the curve, we saw moves of about 4 to 5 basis points lower on the 10, 20, and 30-year yield. Some other breaking news that was crossing the wire, this also on the Treasury, and more importantly, on the Treasury's cash pile. That cash pile now rising to about $265 billion as of April 19th, as those tax receipts start to trickle in. A little bit of context here, we should point out about a year ago, that cash pile was over $1 trillion here. Of course, the debt ceiling and, well, the lack of a compromise on that really constraining the ability of the Treasury to raise funds here. And so still a lot of concerns here about how much longer they have to go. Earnings also crossing the wire, Scarlett.
Yeah, I'm taking a look at CSX, the railroad company, and the shares are moving higher in after hours trading, up about 2.5% after its earnings beat analyst estimates. Whether you're looking at revenue, which came in at $3.71 billion, better than the $3.6 billion expected by analysts, or on the bottom line, 48 cents was the EPS. Analysts were looking for a nickel less at 43 cents. Operating income also increased about 14% to $1.46 billion. And it's in contrast to what Union Pacific had reported. Although it did top analyst estimates on higher prices, there were some concerns about the challenges ahead as well.
Yeah, I'm looking at the press release from the president and CEO making some comments. They talk about CSX having an encouraging start to the year as the efforts of our dedicated railroads resulted in strong earnings growth. Yeah. They talk about lifting their service performance, providing them with exciting opportunities. You know, Romaine, it feels pretty upbeat and optimistic at this point.
Yeah, absolutely. Here, I do just want to just go to another earnings report crossing the wire. This is Bank OZX, formerly Bank of the Ozarks, one of those regionals that under normal circumstances we probably wouldn't pay much attention to. But of course, everyone focused now on those deposits, and deposits in the period did actually end at about $22.28 billion, which is pretty much on the nose of what the street was looking for. Now, that is a decline, but it is not declining more than what the street was looking for. Similar numbers here on net interest income, net interest margins, as well as average equity, all coming in at or slightly above what the street was looking for. And we are going to speak a little bit later in the program with the CEO of Bank OZK a little bit later.
Yeah, George Gleason will be joining us in the next hour or in the next 30 minutes. But I want to go back to that point about how everyone's focused on regional banks and where deposits are sitting, because there's been a lot of money, Romaine and Carol and Maddie, that have moved to money market funds. But we did get data that show that actually the amount of money parked at U.S. money market funds plunged last week, the most in 2 years. Anyone care to guess why? Tax day. People were taking money out to pay for their tax bills. Makes sense.
Well, it makes a lot of sense, and it's just so interesting that we've been talking about this U.S. Treasury.
Scarlett, you can't ask pop quizzes of
Yeah, that's Romaine's move, Scar. Come on. We were talking about
I think she's only gotten one of my pop quizzes right in 2 years.
I've done a couple of your pop quizzes, right?
I may be exaggerating.
I like the pop
Ernest
quiz.
Hemingway quote.
Can I go back to Bank OZK for a moment?
Yeah.
I'm reading the press release. Provision for credit losses was $35.8 million for the first quarter of 2022. 3 compared to 4.2 million for the first quarter of 2022 and 32.5 million for the fourth quarter of 2022.
Okay.
That's big.
Well, I mean, look, I mean, this is what we're talking about. And we were talking a little bit earlier about Brian Moynihan sat down with David Weston at the Bloomberg Sell Side event. And a lot of this conversation is the same here, right? It's that, yeah, there is softness there. Yes, provisions are going up, but overall, they're still seeing relatively healthy trends.
Yeah, and he did say the economy is slowing down. The Fed tightening is having its intended effect. Loan demand is slowing down. This is what you expect to see. It's not the same, though, as what we had in 2008. It's not even the same as what we had in the late 80s, early 90s. He called what happened a disruption. That was the word, right, Romaine? Not crisis.
A disruption here. But we are still, of course, in a situation where the economy still has to be doing. I'm looking at the terminal now, guys. I mean, Clorox announcing about a 4% reduction of its non-production workforce here. You've also got some other job cut news coming from other companies here. So you still have some folks still kind of trimming around the edges, I guess in anticipation, maybe, of that slowdown?
I think that's exactly what it is. I think companies, when they can have an opportunity to cut costs, whether it's through attrition, letting people go, they're going to do it to get ahead of it. It just feels that way. But we will certainly hear more as we work our way through the earnings season. All right, guys, that's a wrap. The Thursday cross-platform coverage, radio, TV, YouTube, and Bloomberg Originals Beyond the Bell, counting you down to the close on this Thursday. We'll see you again, same time, same place tomorrow.